So we're going to get started. We have many more who sign up. We had 62 sign up for this program, which is great. So I'm Mary Conklin with the University of Connecticut. I work on the plant science department, working with commercial fruit growers. This program is funded by UConn Farm Risk Management Program in cooperation with the USDA Risk Management Agency, and they're the ones who are funding this. A couple of housekeeping things to start off with. Please turn your cameras off. I'm not an IT person, but I understand that the fewer cameras we have turned on, the smoother Zoom works. So please keep your microphones muted throughout the entire program. For questions, there is a chat box. You can put those in and that will be monitored. So we'll take care of that. This program is being recorded and I will email out the link to everyone once I get it up online. So if you missed something or you want to see it again, you can go back and watch it. You also will be receiving an email evaluation at the end of the series. We need to report back to the USDA, not number of people, but whether someone actually learned something from the programs we're conducting. So you're going to receive an evaluation, very short, in a few weeks. And then you will also receive another evaluation in the springtime to see if what you've learned you've put into action. And again, please respond to these when you get them. They're not going to be very long. We're going to keep them very short. So with that, I'm going to turn it over to Julia and the rest of the Carrot Project.
Awesome, thank you. This was my header slide. We're doing record keeping and bookkeeping today. And actually, I didn't know about turning off the cameras and helping that work with Zoom. It is helpful to see folks' faces, but if you have questions that you want to ask live, we'll turn them on again. I'd love to know who's here. So if you want to type into the chat window who you are, what do you do, vegetable grower, livestock, and if there's one thing that you'd like to learn in this workshop, go ahead and type that in. I know some people had sort of previewed some questions that they had when they registered, but go ahead and get those questions in the chat window as well, just so we can see what's on people's minds. Type in the chat.
And I'll go now. I'm Jeff Cole. I'm the client service specialist. You will contact me if you want follow-up support or you have any other questions. And as Julia noted, we know there are questions that you posed when you registered. Some of those will be covered today. Some might be covered in one of our other sessions. Some of them we don't have the capacity to cover today. And if you email me, I'll get you connected with the right people to give you the right answers. And finally, the one question that I will address today is the question about agricultural technology platforms. And in fact, New Entry Sustainable Farming Project did some research and they are reporting out on that very soon. It's a multi-part series. It begins Thursday, November 4th. I'm pretty sure it starts at 6 p.m. It's an online series. And if you go to nesfp.org and to their event section, you'll be able to see more and register, and hopefully that will answer some of your questions.
I'll go ahead and type NES New Entry Sustainable Farming Project.org. I'll just type that into the chat window for everybody. Cool. Well, thank you all. It sounds like we've got a diverse group of farmers in the room. So thank you all. My name is Julia Shanks. I am the author of a book called The Farmer's Office. I'm also the senior business advisor at the Carrot Project. So I help support the business assistance that we offer to farmers. I'm also a QuickBooks certified pro advisor, which apparently gives me some credentials of something, but, Kian is also here. He's our co-trainer, and he'll introduce himself more formally next week when he's presenting, but I just wanted you to say hello right now also, Kian.
Hey everyone, I'm going to let Julia do the talking today, but we do swap back and forth a bit, and she usually puts me on the spot so she doesn't have to put anybody else on the spot.
The resident farmer who's not shy of speaking. So this is a 3-week program. Today we're going to talk about bookkeeping and record keeping. Next week we're going to talk about scenario planning and sensitivity analysis. And then week 3, we're going to talk about cash flow budgeting and break-even analysis. And break-even analysis is probably the most powerful tool that I've seen, and I'm excited to be able to share it with you all. And then after the training, we're going to have an opportunity to put this into practice with our support. As Jeff mentioned, the CARET project does offer one-on-one business assistance and coaching. So if you're feeling sparked with questions and curiosity from these 3 weeks, definitely get in touch with Jeff to see how we can further support you. So we're here with bookkeeping. So today we're going to talk about record keeping and bookkeeping, and we're going to talk about it in 4 parts. We're going to talk about just a general overview of record keeping and the different kinds. We'll talk about how to organize your system. And this is a more general organizing your system, not necessarily for QuickBooks, but for any bookkeeping, record keeping system. We will talk briefly about QuickBooks and address some of the questions that people have in terms of online and desktop. And then finally, we'll start to preview how to read your numbers. The whole reason why we're bothering with all this bookkeeping business is not because we want to file our taxes, even though we have to. We're bothering with all of this because we want to make informed decisions about our business, how we can be more profitable, and how we can grow. So part 1 is an overview of record keeping. And just as a reminder, I love questions, so feel free to type them into the chat box. I love being interrupted by questions, so don't be shy. I know there are quite a few of you, so Kian is going to help me manage the chat window, but definitely ask questions. So why bother record keeping? And I think a few of you have already acknowledged that it's not your favorite thing. And I know you all would rather be farming, growing flowers and vegetables and tending to your livestock. But if you, actually somebody said this to me in a positive way, they said, negatively, you can't manage what you don't measure. But more positively, you can manage what you do measure. And bookkeeping is a method of measurement so that you can measure and adapt. So I'll give you a couple of scenarios about why bother with record keeping. And at a very base level, let's say you forget to record a $20 expense. You go to fill up the truck and you spend $20 in gas, and you shove the receipt in your pocket and it goes through the laundry and never makes it into your record keeping system. The effect on that is that your reported expenses goes down and therefore your profits go up. So if you have $100 in revenue and you have $80 in expenses, you have $20 in profit. But if you don't record all your expenses, you're going to have a higher profit. And that's going to mean that you have more in taxes. You're paying taxes on your profits and therefore more cash outflow. And another example of why you want to bother with bookkeeping, and this actually happened with a client of mine. We were working on his QuickBooks together, and he was downloading his Square sales and bank statements into QuickBooks. And the Square sales recorded revenue, the Square download, and the bank downloaded transactions, and those were recorded as revenue. And what happened was he double counted his revenue because he counted both Square and the bank. So his income was overstated by $3,000. And if your income is overstated, number one, you're going to pay more in taxes. And I think everybody agrees the less we pay, the better. But just as important is that you don't have a true understanding of your cost of production. And it looks like you're doing better than you are. You had an additional $3,000 in sales. So, how does that affect analysis? If you had, 50,000 in actual sales, but you double counted some of it and it shows that you had 53,000, your cost of production is the same. It's 25,000. That's what you recorded in QuickBooks. And if you're double counting your revenue, you're going to show a higher gross profit. You're going to show an extra $3,000 for overhead and reinvestment in your business. And you might be like, oh yeah, I can totally afford to buy that new hoop house or the new tractor. I've got this extra profit, when in fact you don't. So you might make a different decision about your business based on your understanding of your profitability. So having an accurate picture can help you make accurate decisions. So knowing your numbers impacts how you manage your business. So you all have questions about your business. How can you be more profitable? Should I sell at a farmer's market? Can you purchase new equipment? So these are the kinds of questions that you're going to have about your business. And the answer to these questions is going to be in your record keeping system. And I'm curious to hear from you all. If you can type into the chat window, what questions do you want to be able to answer from your bookkeeping system? Here we are at the end of October, but let's say January, you start with a solid record keeping system. And next October, you're looking at your books and you're like, I really want to know the answer to this. If you can type into the chat window, what are some of the questions that you want to be able to answer about your business? Kian, I'm going to put you on the spot. What are some of the questions you want to answer? You're a full-time farmer too.
I want to figure out the profitability of having an autumn extension to my CSA
Great
and having
question.
basically adding an enterprise.
And what information do you need to know to have a autumn extension if it's profitable?
I need to know my cost of production in general so that I can apply that and make sure I can get the right price to make sure that it makes sense. I also have to make sure that I have all of the pieces in place. Do I need to buy anything extra?
Yep.
How much do I need to charge for deliveries if I'm doing that?
Yep.
Just basically being able to line all the numbers up. So as much information as I can glean from my current production, that would be able to apply to a new enterprise.
Yeah. So there's both, looking back and looking forward. So looking back, you just did your first CSA extension, was it profitable? So can you isolate the sales from the winter or from the fall extension from the overall sales? So what mechanism do you need to use to track the different types of CSA sales? And also having a mechanism to be tracking your sales revenue, or I'm sorry, your production expenses versus your other types of expenses so that you can see what is your cost of production. Steve asks, what's my cash flow? So, certainly if you're tracking your cash in and your cash out, you can really see your cash flow. And we're not going to get into too much detail today, but, being able to look at your balance sheet is really going to be a great tool for managing cash flow. So planning for a diversified operation, how would you use bookkeeping to manage the different aspects? So, learning how to track the different aspects of your production. So knowing which expenses are applied to which enterprise and having a system to track it. So what information do you need? You need to know what you sold, whether you sold this end from, the vegetables or from the livestock, or if you sold your summer CSA from your fall CSA. You want to know what your fixed expenses are versus your variable or production. And you want to know sales specific expenses. What expenses were associated with this farmer's market or delivering wholesale? And these are the details that you need to be able to extract from your record keeping system. And if you set up your record keeping system with these questions in mind, you're going to be better able to extract it. So Dan is asking if he wants to know if he can afford to build a permanent farm stand. And, we'll talk about that in week 3 when we talk about break-even analysis, understanding how to set sales goals. And knowing how to set a sales goal is understanding what your expenses are and what you need to be able to cover. So there's different kinds of record keeping. There's the financial record keeping, in terms of sales, expenses, cash flow, investments. And there's the production record keeping in terms of harvest yields, pick records, time and labor. So today we're going to primarily talk about the financial record keeping, but that's not to say that the production record keeping isn't important. And, some of these more specific questions take both of these pieces together. So I think it was Steve, was how do I forecast the variability of crop yields? If you have a system of tracking your harvest yields or your sales records, you can start to map out the pattern of your sales. And how we track matters. So number one, what are we tracking? We want to track the date. You know, talking about cash flow, we want to know when things are spent so we can start to, you know, map out our cash flow. We want to know the dollar value and the purpose. And then how do we track? QuickBooks is certainly the industry standard for small business bookkeeping. But, you know, QuickBooks is a rather robust system, and some people may prefer to use Excel or Google Sheets, which is a little bit easier, more approachable for a lot of people, or even a pen and paper ledger, you know, just writing it down in an old-fashioned ledger book. The thing to remember is that all systems take time. You know, I know a lot of people are hesitant to, you know, get into QuickBooks because, you know, QuickBooks is a huge time investment in terms of the, you know, data entry. And I should qualify that to say that there's a learning curve. And once you get up that learning curve, it's not such a big investment. But, you know, so the data entry is going to be slower. But in terms of analysis and creating reports, it's going to be zip, 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 press a button. Excel is going to be sort of in the middle. The data entry is going to be, you know, faster than QuickBooks, but it's going to take you longer to run reports. And a ledger, certainly the easiest in terms of data entry, it's going to be a lot harder to extract the information that you need to answer all of these great questions that you all were asking about your business. So I have like 6 rules of bookkeeping, but I'm going to go over just 4 of them today, the 4 big ones. The first rule of bookkeeping is garbage in, garbage out. And I think as farmers and food producers, you all know that the quality of your inputs directly impacts the quality of your outputs. Excuse me. And, you know, with your vegetables and with your livestock, if you have crappy soil, you're going to have crappy vegetables. And if you have low grade feed, you're going to have low grade meat. And the same is true with your record keeping system. If you have bad data that you're putting into your record keeping system, you're going to have ineffective reports. And if you have solid data going into your record keeping system, you're going to have solid reports. So the input is the transactions, all those little things on a day-to-day basis that go into your bookkeeping system. So you buy something, you know, you go to the hardware store, you pick up some supplies, you pay an employee, you go to the farmer's market and you sell something. So you have all these little transactions, all these little day-to-day exchanges going on. And those inputs are going to go into your record keeping system. And the outputs are going to be the financial statements. And they're a summary of all the transactions that help convey information. You know, if you have a pile of receipts, you know, you look at it and it's like, you know, what do I do with this pile of receipts? But the bookkeeping system helps organize it so that you can extract information. And the primary reports are the profit and loss, which is an overview of the profitability and your operations. You have the balance sheet, which is what you have and how you got it, whether you borrowed money or you earned it. And then finally, you have the statement of cash flow, which tracks how money moves in and out of your business, how cash moves in and out of your business. I think most people are familiar with the profit and loss statement. The balance sheet is super duper important. We're not going to get into too much detail about it today, but certainly if you're going for a loan or applying for a grant, you're going to need to learn how to put together a balance sheet. And then the statement of cash flow ties together, you know, all the different activities in your business, not just the operations, but the loans and the debt service and the investments. So a good bookkeeping system will manage the input and provide the output for you. The second rule of bookkeeping is that you're the boss. And I think it was Steve who was commenting that, you know, the chart of accounts that QuickBooks offers is not really farmer helpful, and certainly not helpful to, you know, the scale of farmers that you all are, because I think most of you aren't relying on insurance proceeds to fund your business, you know, and they have a line item right at the top. So you need to adapt your bookkeeping system in a way that's going to work for you. You know, create account names that makes sense for you and your business. Organize it in a way that's going to give you the information that you need. And don't be bullied by what QuickBooks tells you you should put in your chart of accounts. Set it up in a way that makes sense for you. And that ties into rule number 3, which is to be consistent. If you're setting up your bookkeeping system in a way that makes sense for you, it's going to be a lot easier to be consistent in your data entry. You're going to know that, every time I purchase, farm supplies, it gets entered into my QuickBooks as farm supplies or seeds and seedlings or telephone expense. And if you, set things up in a way that makes sense to you, you will be able to be consistent. You also want to be consistent in how often you enter it in. If you're only sitting down at your desk once a month, you're not going to, I just got a pop-up that said participants can now see my application. Were you all not able to see my screen up until this moment?
I can see your screen.
Okay, and you've been able
I've
to
been
see
seeing
it
it
the whole time?
I've been
You
seeing
have
it the
seen
whole
it?
time.
Okay, great. Thank you. I just got a little nervous with that little pop-up warning. So you want to be consistent in entering in your data on a regular basis, because that's going to give you the consistency in data entry, but also give you access to information quickly and easily. And the 4th rule is to focus on managerial decisions. And I don't know how many of you work with a bookkeeper or an accountant, tax accountant. A tax accountant is going to tell you to organize your bookkeeping system one way. And the way the accountant wants you to organize it is really efficient for taxes, but it doesn't necessarily give you the information that you need. And we'll talk about that in a few moments in terms of how to set up your chart of accounts. But you want to set it up in a way that focuses on the managerial decisions. And bookkeeping for taxes is different than bookkeeping for managerial decisions. And if you have a good tax accountant, they can take well-maintained books and make the quote unquote tax adjustments. They can, shift things around so that it fits into your Schedule F tax return. So that is an overview of the bookkeeping system. So Corey did ask a question, is QuickBooks difficult to customize for farming operations, or is there a platform that's better designed for agricultural bookkeeping needs? QuickBooks, I think, is totally very easy to modify and adapt to a farm operation. And again, if you want extra support with that, get in touch with Jeff, and we have business advisors who can help you with your QuickBooks setup. But I really do think QuickBooks is the best bookkeeping option. Okay, so organizing your system. Oh, going the wrong way. Okay, so we talked about garbage in, garbage out. And so we want to talk about how we organize our system so that we have good outputs. We have good reports. If we have a good system for tracking, then we'll have good reports. So the questions about QuickBooks, we're going to talk about that in the 3rd section. So I don't want you to feel like I'm ignoring you, Melody, but I'll get to those questions in a little bit. So the first concept I want to talk about in terms of setting up a system that works for you is the concept of cash and accrual accounting. And I'm curious, does anybody, if folks have heard of cash and accrual accounting? I guess this is kind of hard to type in the chat window. Yeah, I have, or no, I haven't. Yes. So cash accounting is recording revenue and expenses when the cash is received or spent. And it means that you're not really tracking accounts payable and you're not tracking accounts receivable. With accrual accounting, we're recording revenue when it is earned and expenses when they're incurred. So, for example, if you sell wholesale, you're earning the revenue when you deliver the wholesale, but you don't necessarily get the cash until the cash is, until your customer pays you, which may be 15, 30 days later. And the goal with accrual accounting is to match your expenses with revenue as much as possible. If you want to know your cost of production, you want to know, what were my revenues associated with my production costs. And I don't want you to be scared by cash and accrual accounting. If you're using a bookkeeping system like QuickBooks, it's going to, manage it for you a lot more easily than you might expect. So let me just give you an example of an apple orchard that I worked with. So in April of 2021, you prune your trees and you start with your orchard maintenance, and you're paying people, you've got expenses and labor and so on. And starting in September, you start to harvest and sell your apples. And from September until March of 22, you're selling those apples that you essentially paid for in 2021. So how does that impact our vision? So let's say in 2021, we're selling, January 2021, we're selling the last of the 2020 crops, let's say 24,000. We start harvesting September through December, and we sell some of those crops. And then in 2022, we may sell the rest of the crops. And then in 2022, obviously, we're going to start selling, more crops from 2022. So we're recording revenue from, 2020 to 2022 across many years. So if you're using accrual, you're going to sort of say, all right, well, my 2021 revenue was 40,000 plus 20,000. And if I'm using cash accounting, my sales in 2021 were 24,000. So we have a difference in our operating income, revenue minus expenses, depending on whether we use accrual or cash accounting. And the accrual accounting is going to give us a better sense of, this is what we spent to produce this crop, and this is what our profits were. So this is, one example of how accrual and cash accounting might differ. In the case of this farm, it was more than they could handle than, making the accrual adjustments in QuickBooks, and they changed their accounting year. So their accounting year was April when they started the orchard maintenance and went until March. So whenever they ran a report, it was April to March. So they could see the entirety of that operation that happened in the single accounting cycle. So another example is, if you're selling wholesale, and you deliver $1,000 worth of product, you go into your QuickBooks, you create an invoice for the client in QuickBooks, and you expect them to pay in 30 days. A week later, you're running reports to see how things are going, and you run a report on a cash basis. And will that $1,000 be included in revenue? So here's an example, you're running the report. Here's, it says cash basis in QuickBooks, and you've got your restaurant sales and grocery store sales. And the question is that $1,000 included in there? And if you're running a report on a cash basis, because you have not received that cash payment yet, you won't see that income here. And it's kind of a mind twist, and I have more colorful language and how it messes with your head. But when you're expecting, you're like, I know I sold that $1,000, but it's not showing up on my income statement. And, it just doesn't make sense. And it messes with your head. So even if you don't make the quote unquote accrual adjustments, it's helpful to run your reports on an accrual basis so that you can really see what you're doing. I think intuitively, we actually think in accrual. So cash accounting, better for tracking and understanding cash flow. Accrual accounting is better for understanding production and work cycles. In QuickBooks, it's just a radio button that helps, that you can sort of switch back and forth. How are folks doing? Any questions? I know that we have cameras off so that we save on power on Zoom, but I just wanted to check in if how folks are doing.
Okay, I'm keeping up.
All right, good to see you, Orville, or good to
Yeah.
hear your voice.
Yes, the same. Good to see you.
So my general recommendation is to, when you set up QuickBooks, if you decide to use QuickBooks, that you have the company settings for accrual, and just as a default, run reports in accrual. But if you're curious about your cash flow, certainly you can run a report on a cash basis. to see the cash flow. So what does this all mean? Accrual accounting is going to take some more work, especially if you want to, for example, in the case of the orchard, if you want to make the adjustments for inventory, what you sold and what you haven't. But it is going to give you a better picture of your profitability. Whatever you do, whether you do a cash accounting system or accrual accounting, know which method you're using and why, and be deliberate. And this is especially important when you go to read reports. You know, you don't necessarily want to make the inventory adjustments in QuickBooks, but if you're reading a report, you might want to, you know, kind of make a mental note. Oh, I still have, you know, $50,000 worth of apples in the cold storage that I haven't sold yet. So you know, you may make mental notes as you read reports. So that's concept number one, accrual versus cash accounting. Concept number two is that everything has a bucket or a shoebox. And I don't think there's anybody quite as old as me in this group, and maybe one or two of you. But for those of us who are this old, you may remember when we sorted our receipts and invoices in shoe boxes. And you had your telephone bills here, and you had your electric bills here, and you had your rent bills there, and everything was in a shoebox. And the same is true in QuickBooks. And you know, these are buckets of how we sort our expenses, whether it's, you know, infrastructure and equipment, or direct operating expenses such as seeds and seedlings, or packaging, or general and administrative expenses such as liability insurance, or heating fuel for the house, the office. And we want to, you know, start thinking about buckets and categories of how we want to organize things. And in QuickBooks, all of our transactions will go into a bucket. And these buckets or categories are called the chart of accounts. And that's the structure by which we're going to sort of set things up and set the tone for how we read reports. So, you know, for example, if we categorize expenses by seeds and seedlings, when we run reports, we're going to see what did we spend on seeds and seedlings. So the buckets or the chart of accounts, we have different types of buckets, and it depends on whether they're on the income statement or on the balance sheet. And I just want to take a quick pause. I'd love to get sort of a survey of how many people are using or expect to use QuickBooks. And I guess if you're using Excel or Google Sheets and plan to stay there, folks could just sort of quickly drop into the chat window.
We have one person using Xero,
Yes.
Excel. Lots of folks using QuickBooks. Banktivity. I have not heard of that one.
Yeah, I have not heard either.
We have a few people who are starting to or aiming at QuickBooks, but aren't quite there yet.
Cool. Excellent. Well, I mean, I think Excel can be a really robust tool, and I've seen some really jacked up spreadsheets. But I find, you know, I think Excel can be a nice gateway drug, if you will, to get into bookkeeping. And, you know, I'm working with a farmer right now who's, you know, has so many questions about his business, and his Excel spreadsheet has just gotten so overwhelming that it's like, you really just need to transfer into QuickBooks. It will make things easier. So Banktivity is a Mac app. Huh. I'll be curious to see that. Kian, do you have a Mac?
No.
Oh, okay. I guess you won't be researching on the side is my question for you.
Not for personal reasons, but I'm going to read up on it because I want to be able to help Robert if he needs help.
Perfect. So before I talk about what to do in terms of setting up your chart of accounts, I want to talk about what not to do. And, you know, I talked earlier about, you know, setting up your bookkeeping system to make managerial decisions and not necessarily to file your taxes. So I call this the Schedule F income statement. And, you know, these are more or less the categories that you see on the Schedule F. And for the newer farmers, When you file your taxes, if you're a sole proprietor, you'll do a Schedule F attachment to your tax returns. If you're an LLC or an S Corp, you're going to file different taxes, but the Schedule F is very common for a lot of farmers of this scale. And so these are, the suggested categories that the Schedule F offers you for the types of expenses that you might have. But it's, for as elegant as it is in its simplicity, it has issues. So issue number one is that grants are included in income. It's cash that comes into your business. You got to report it on your taxes, so you record it as income. And when you start to look at your reports, you're going to see this fluctuation in your revenue, and you'll see, oh, well, 2016, I did okay. Wow, really kicked butt in 2017. And then, oh, geez, didn't do so well. And it sort of puts an artificial spike. And then if you're looking at your expenses, you're like, well, what did I spend on feed relative to my revenue? It looks like, relative to revenue, you were really keeping it under control in 2017, but it's like, oh, wait, I got the grant. So let me back out the grant and see what did I spend on feed relative to revenue. And you can see, for example, that even though the grain expense is sort of going up marginally, you look at it as a percentage of revenue and you see a different story. So if we look, and this is called common sizing numbers, we look at all of our expenses as a percentage of revenue, we can start to see the differences in year to year. And, having that grant mixed up in there just sort of makes a mess and makes it harder to really see how you're doing. Challenge number two is that your expenses are aligned to the Schedule F, but not necessarily to your business reality. So as an example, the direct cost of animals, you've got F feed up here and you've got veterinary expenses down here. Again, easy math to add it up, but it's just one more step that you need to take to understand your direct cost of animals. Something like insurance is all, kind of glommed together. And it's like, well, is it liability insurance, which is just, general overhead? Is it vehicle insurance, which is, could be argued that it's the cost of selling because you need a truck to get to the market? Or is it, workers' comp and disability insurance, which is the cost of having employees? So, is it your labor costs that's driving this expense, or is it the general overhead that's driving this expense? And by glomming all your insurance together, you don't really have a strong sense of where the numbers are coming from. And similarly with taxes, is it payroll taxes, which is the cost of having employees? Is it property tax, which is the cost of being on the land? Or is it your income tax because you were profitable? Yeah, you. So different types of expenses get glommed together in ways that perhaps make sense for your tax return, but don't necessarily make sense for managerial decisions. So I encourage you to rethink your categories and rethink for your chart of accounts. And, we're starting to think about how we want to set up our chart of accounts in QuickBooks. The old thinking is insurance, and we've got liability, workers' comp, and vehicle insurance. We've got supplies, whether it's office supplies, which is an administrative expense, or seeds and packaging, which is a field expense. And I encourage you to start thinking in new categories such as production expenses or production costs. What does it cost to grow, produce what it is you're in business to do? What are your labor or payroll expenses, which include salaries and wages, workers' comp, taxes, payroll taxes, and then general and admin, office supplies, liability insurance, and so on. So you really want to rethink your categories. And Kian is on top of the chat and the questions, so thank you. There was a question of adding subcategories to the broad categories, and you can absolutely do that. They're called sub-accounts, as Kian has already said. I sometimes refer to them as parent categories and children categories.
I think of it kind of like a tree.
Say more about that.
Well, if I have a lot of things, say for plant starts in the spring, all the things that go into that. But when I'm thinking about it, I'm thinking about all of the different little pieces,
Mhm.
which in my head looks like all the little the branches coming off of a limb of a tree, and each of those branches might have twigs coming off of it. So it allows me a more expansive image in my head.
And so I'm going to take this imagery a little bit farther. Do you sort of, because I find that sometimes people get a little bit too in depth in their chart of accounts and how they set things up, and how much in depth do you sort of limit yourself? Like, okay, well, I'll do the main branches and the sub branches, but I'm not going to categorize the twigs.
I don't usually categorize the twigs unless I really need to answer a question, because I have limited time to spend on my QuickBooks. I'm a farmer.
Yeah.
I don't want to spend more time than is actually helpful staring at a computer or sitting at a desk. But if I have that question that I need to answer, I can always add a twig. I can always add a sub account
Yep.
to be able to see that in more detail. But also, I do have a category in my chart of accounts called little piddling shit. For
Nice.
it's kind of it's like the $2 purchases you occasionally need
Yep.
that don't really have a category and you don't necessarily keep the receipts for,
Yep.
or
Yep.
keep them in as clear a way. So
Yep.
yes, I have a few twigs in my chart of accounts.
Right. But you have a category for, in I think back to my restaurant days, it was small wares. You don't need to separate out the fork, purchasing forks for the dining room versus knives. It's all small wares. So awesome. I like that imagery. Thank you. So when I think about how to organize the chart of accounts and organize your income statement, I think about what's going to be most helpful to extract meaning. So, at the top, we want to have revenue or gross sales. So what are you in the business of doing? And, just scrolling back, I think we've got vegetable growers, turkeys, goats, herbs, and dairy. So we got a lot of different businesses in here. So that's what you're selling is, the dairy, the flour, the vegetables, the livestock, and so on. You're not selling, grants, or, you're not in the business of renting an apartment on top of your barn. Certainly those are things that you want to track, but that's not what you're in the business of doing. So we have top line gross sales, and then next, we'll have our cost of production, or our cost of goods sold. And this is something that I'm sort of evolving on. So I hope I don't confuse you on this, because I'm changing my thinking on this. I come from a restaurant background. So for me, cost of goods sold is very much, the things that you purchase for resale. So, if you're buying food to, ground beef to make hamburgers in a restaurant, that's going to be cost of goods sold. In a farm, I think of it as things for resale. So if you buy milk from another farm to then include with your CSA or at your farm store, that's goods for resale. But sometimes people also reimagine that category, cost of goods sold, as cost of production. So, the seeds and the soil amendments and the black plastic and the stakes and the small wares, all those little things are part of your cost of production. What is that? What does it take to grow that tomato? And your gross profit, we'll get more in depth into the gross profit in week 3. But gross profit is my revenue minus cost of goods sold. And depending on how you define your cost of goods sold, COGS, COGS, it can tell you what you have left for, the overhead and other expenses. In terms of the operating expenses, I categorize it into 6 different categories. We have our direct operating expenses. What is it? What is part of the operation, whether it's the small tools or the packaging, labor, obviously the salaries and wages, but also payroll taxes, employee benefits, workers' comp insurance, health insurance, cost of having employees, occupancy, what does it cost to be on the land, general and administrative expenses, things like office supplies or your QuickBooks payment, repairs and maintenance. And certainly you could argue that repairs and maintenance are part of direct operating. If your tractor isn't working, you got no operation. But I do like to call it out separately just because it can be such a big expense for a farm. So I think it's important to, have that category for repairs and maintenance. And then there are the one-time expenses. And, if you remember earlier where we talked about, looking at expenses as a ratio of revenue, these one-time expenses, if you buy an egg washer, let's say, you're not buying an egg washer every year and you buy it one year and it kind of throws off your expenses. So it makes it look like you did really poorly in one year instead of doing as well as you did. So I like to have a category for one-time expenses to sort of help you see more clearly the trends in the other categories. Oh shoot, you know what? I had an animation that was sort of talking us through highlighting. I missed that. Sorry about that, folks. And then the operating income is your revenue. What did you sell? Minus your cost of goods sold, your cost of production, minus your operating expenses, and that's your operating income. And then you have the proverbial line. You've got things that are below the line. So these are things that we need to put on our income statement for filing taxes, and that's just where they belong in our bookkeeping system, but they're not necessarily part of our operations. Things like grants, depreciation expense, interest expense, we need to track it. But, if we're looking at how profitable our business is, it's not, this is going to skew what we see. And then we have the bottom line, which is our net income, operating income plus or minus other income and expenses. And by organizing it this way, we can see, number one, is our core operation profitable? If we're in the business of raising goats and sheep, are we making a profit doing that? It sounds like somebody is unmuted and typing, and I'm thrilled that you're typing lots of notes, but if you wouldn't mind checking your mute button, cut down on the background noise. So we can see, is our core operation profitable, or is something else driving our losses, and can we afford our debt and capital improvements? Our core operation may be profitable, but are we relying on grants to make it work? Can we afford the loans? Is our core operation profitable enough to support the loans that we have? If the interest expense is putting us in a net loss situation. And I put depreciation in here because this is a representation of the equipment that we have. Can we afford the equipment that we purchased? If the depreciation expense is putting us in a net loss situation, maybe we shouldn't be buying the brand new tractor. Maybe we should be buying a used tractor instead. Robert's asking, how do I categorize the cost of perennial plants? Is it a one-time expense? Or because it does kind of feel like COGS. So perennial plants, some people, I would be okay if you categorized it as a one-time expense. I think, for example, orchards often put the cost of planting trees as an asset on the balance sheet because it's going to be something that's producing for many, many years, 25 years to come. So some perennials might even be an asset on the balance sheet. Or, if you're buying, you're setting up your farm with, the sage and the tarragon and oregano, and that's like, okay, that's going to be sort of my operation here. You could also put it as a one-time expense. I think either one is fine. The ongoing maintenance of your orchard or the ongoing maintenance of your perennial beds would definitely be an operating expense. Does that answer your question, Robert? All right, well, I hope so. Yes, good, thank you. So when you're setting up your chart of accounts, here are some sample account names. So if your parent category or your main account is direct operating expenses, you may have sub accounts for, you may have sub accounts for things like seeds and seedlings, soil amendments, greenhouse supplies, field supplies, packaging. They're all part of the direct operation of your business. If you have a parent category or a main category of labor, you may have sub-accounts or children categories for salaries and wages, payroll taxes, staff housing, employee meals, workers' comp, all the things that are associated with having employees or workers on the farm. For general and administrative expenses, you might have liability insurance, professional fees, whether it's legal or bookkeeping, the cost of website maintenance. These are things that you need to run a business, but they don't help you grow a tomato or raise a chicken. So going back to, rule number 2 and rule number 3, you're in charge and consistency is key. Using account names, thinking about your chart of accounts in a way that makes sense for you is going to make things a lot easier. And if you're using QuickBooks, you can change the account names. You can also, reorganize it and make it a sub-account of something else. So you can manipulate it. And I know that we've got some folks using Banktivity and Xero. So I imagine that those are also easy to adapt, but I don't want to speak about those other software programs. So in summary, create a system that works for you. You can't manage what you don't measure, and the bookkeeping system is going to allow you to measure so that you can manage. Using a paper ledger is better than nothing at all, but I think most farmers find that QuickBooks is really the best option. And as you're setting up your system, know what questions you want to answer. And I think you all had some really great questions about your business earlier on. So, think about those questions that you want to answer and what information do you need to track so that you can answer those questions. Any questions about, setting up your system?
Yes. I got an Excel. I mean, is it okay to use it for your accounting?
Oh,
Okay.
certainly. Yeah. Like I said, Excel is better. Yeah, absolutely. QuickBooks is a pretty robust tool, and depending on how complicated your business is, Excel might be totally fine. As your operations get more complicated, you may want to graduate into QuickBooks. But certainly, for a beginning farmer, Excel is totally fine.
Okay. I think it's Microsoft that does that, right?
Yep.
Excel. Okay.
Yep. But you can also do Google Sheets, which is a free option.
Okay. All right. I tried sometime.
All right.
Right.
So I do want to address the difference between QuickBooks Online versus desktop. I'm going to try to remain unbiased, but if you know me, you know I'm pretty biased in this, but let's see if I can pretend like I don't have an opinion. So when we talk about online versus desktop, there's different factors that impact. And I think the first difference between online versus desktop is the cost. So online, and it's shaded out with an X because I don't think it's as, I think the better option would be desktop in terms of the cost. If you buy the desktop software, it's $300. It's one time, you download it to your computer. And as long as you have your computer, you don't need to update your QuickBooks. The online version, and I think it's actually now $80 a month. But they have different levels of software that's from $35 per month to $70 per month. And that can be up to $420 a year. So you can see even after 6 months, it's definitely more cost effective to use the desktop version. And Kian is saying it's now $80 a month. So yeah, whew. And Katie is talking about QuickBooks Online works great for payroll too. So QuickBooks Online, and I'll get to that in a minute. Excuse me. I think another thing to consider about the online versus desktop is how many enterprises you can have. So, you might have your farm business, but, maybe you're also running a side, engraving business or something. And, it's a separate business and you want to keep everything separate. I think about in my personal life, I've got a QuickBooks file for me and I take care of my parents' finances for them. So I have another QuickBooks file for them. So if you're using online, you can only have one enterprise. And if you have two enterprises, like you have your engraving business and you have your farm business, you're going to have to pay $35 per month for each one. Whereas in the desktop version, you can have multiple enterprises. I think the real seller for the online version is that you can enter transactions on the go from the app. If you're delivering wholesale, you can ship off an invoice very quickly. You can download transactions from the bank feed. And as who was it mentioned? They also have payroll. So the online version has some apps that integrate into the system. So if you're using Square banking, there's a little more integration. So it makes collaboration easier as well. So the desktop version is, you're sort of fixed on the desk. So, it's not as robust. The desktop version does have a bank feed now. So you can download the transactions from the bank. Another factor is the speed. The online version is a little bit slower just because everything has to go up into the cloud and back down. And you can't switch between windows quickly the way you can in the desktop version. So I find that, for me, the big seller of desktop is the speed and the cost. But I know for a lot of farmers, the ability to have a bank feed and the access from anywhere, any computer is more important. So you need to decide what factors are important for you, if the ability to have the bank feed and the collaboration is more important, or is the cost more important? And I saw a comment from somebody that that's why they switched to Xero, because it's so much less expensive. And who was that said that? Oh, Megan, you mentioned switching to Xero. And I actually looked into Xero when QuickBooks was threatening to discontinue the Mac version of the Mac desktop version of QuickBooks. And so I hate, oh shoot, I just shared my opinion. I'm not a fan of the online version. So I was exploring the other options and I looked at Xero, and I do find that Xero is not as robust as the desktop as QuickBooks. So depending on the nature of your business, you may feel the need to upgrade. So Katie says you can use classes in QuickBooks to separate the different enterprises. Absolutely. Classes are fantastic. So Sequana asked, how do we affect cost of animal management equipment for cost purposes? You have a scalder and plucker that you use for ducks and turkeys, but not our goats. That's a great question. I hope I'm saying your name correctly. Apologize if I'm not. So we can certainly differentiate, we're not really going to get into this kind of cost analysis, but, if you have, a plucker, you can say, I'm going to allocate 60% of it to the chickens and 30% of it to the ducks or to the turkeys. So you can say, how much do you want to allocate to each of those different enterprises? So that's cost accounting. Oh, good. I said it right. Thank you. So I think it's also important to recognize that QuickBookies and, for that matter, Accountanese are different languages. And I think people get tripped up a lot of times because they're looking at QuickBooks and they're expecting to see English and it looks like English, but it isn't. And some of the words have very specific meanings that we don't think about in colloquial English. So if you receive a payment in QuickBooks, it's only when you receive a payment that's paying off an invoice. It's not like, oh, I went to the farmer's market and somebody paid me, I received a payment. It's a very specific meaning. So it can be difficult to sort of wrap your head around, what looks like English, and it's really not. QuickBooks also gets a little confusing because they have different terms in different places. So you might see received from on a deposit slip, and on expenses, you might see customer job, and somewhere else you might see name, and it's all the same thing for customer job, depending on where you are. And the online version, for example, calls things products and services. The desktop version calls them items. So, if you're watching a video tutorial somewhere, you might hear different things. So it can get really confusing, to see that. And I think one of the things that QuickBooks has been trying to do with the online version is they're trying to make it more user-friendly and more approachable. And in the process, they're changing how they call things. So, you have your chart of accounts, which is accounts. But then when you look at an expense, when you're entering in an expense, it's asking you for the category. So it gets confusing. It's not the chart of categories, it's the chart of accounts. It just requires a level of patience. And as I mentioned earlier, there's definitely a steep learning curve with QuickBooks. But once you get the hang of it, it's really a robust tool. All right, so let's talk a little bit more about the chart of accounts. Come on, there we go. So as I talked about earlier, the chart of accounts has, structure to it, and how things are categorized, income, expenses, the account types, is going to dictate how things are going to show up in your reports. And it's really the chart of accounts. And I'll share with you all a link. I go into more depth. I have a YouTube video about the chart of accounts and really sort of explain the mechanics behind it. But you want to start to think about the framework for your accounts. So in terms of your revenue categories, you want to think about it in terms of either your sales channel or the products that you sell. So your sales channel is, how do you sell it? Do you go to a farmer's market? Do you have a farm stand or a co-op? Do you sell through a CSA or a wholesale? Your products are your different enterprises. It might be the ducks or the turkeys or the goats. If you try to do both at the same time, you might get a mess. So for example, if you sell beef and vegetables at the farmer's market, do you categorize it as beef and vegetables, or do you categorize it at farmer's market? And there's so much overlap. So you really need to pick one or the other. Somebody mentioned, Kate mentioned using classes, and classes is the workaround. Unfortunately, we don't have time to get into that today, but know that there's ways to track both. In terms of the expenses, it's helpful to have what I call parent categories and children categories, or primary accounts and sub accounts. And when you're going to set up your chart of accounts, you'll see an option to make sub accounts. So the parent categories would be the direct operating expenses, the payroll, general and admin, and so on. And the children categories would be, the seeds and seedlings, fertilizer, salaries and wages. And these would all be nested underneath one of the parent companies. So these are the account types. And if you look at the chart of accounts, this is a screenshot of the desktop version. And this is the name, and this is what it is. And this is what's going to show up on your income statement or your report. And the type tells you where it is. So an account type of an expense means that it's going to be on the income statement. An account type as a fixed asset is something that's going to show up on your balance sheet. So, going back here, these are the different types of accounts. So if you select this account type, you know that it's going to show up on your balance sheet. If you select this account type, it's going to show up on your income statement. So, sometimes we may look at something and you're like, you're creating a new account. You're like, oh, it's a fixed asset. and you select the account type as fixed asset. And then when you run your reports, you're like, where did that thing go? I bought a new greenhouse. I don't see it. And it's not going to show up on your income statement because you selected the account type as fixed asset. When you're creating a new type of account, this is again a screenshot, make sure that you look at all your options. Don't be fooled into thinking this is all you've got. So as I mentioned a few moments ago, the account type is going to determine where it shows up. So if you select the account type as income, it's going to show up here. If you select the account type of cost of goods sold or COGS, it's going to show up below revenue and before gross profit. So, if you're starting to, when we talk about break even in week 3, you may want to think about what do you want to put into that section. You don't necessarily have to call it a cost of goods sold, but if you make it the account type of cost of goods sold, this is where it's going to show up in your report. Anything that has an account type of expense is going to show up in this area. And things that are other income or other expenses are going to come below the line. So, in the beginning of the presentation, I talked about, how you need to have grants on your income statement because you need to, but you don't necessarily want them glommed up here in your gross sales. You can select an account type of other expenses and it's going to pull things down. So you can have it in the appropriate section. So a couple of tips for using the chart of accounts. Number one is use sub-accounts to keep things organized. Make inactive the accounts that you don't use. So a couple of you mentioned that, QuickBooks has these accounts that make no sense for you in your business. You can make them inactive or delete them if you haven't used them before, just so you don't get burdened by them. You can rename things, rename accounts to make sense for you. You can edit the chart of accounts till the cows come home, and to make sure it looks the way it is going to be helpful for you. You can merge accounts. You may find that I'm thinking back to Kian's visual of the twigs. You may decide that you've got too many twigs in your chart of accounts and it's time to merge them, because you had the black plastic and you had the red plastic and you had the, maybe just you need plastic, row cover. You don't necessarily need to get into too much detail. So you can rename things to merge them so that you can consolidate. And the beauty of QuickBooks is that if you merge or rename, it's going to apply to all the previous transactions. So if you had an account for seeds and you decided you wanted to call it seeds and seedlings instead, you can edit it, and every single transaction that happened prior to that moment will get renamed. So it makes it really agile and nimble to set things up in a way that's going to make the most sense for you. And as you're working on your chart of accounts, again, it's really flexible in QuickBooks, so you can edit as much as you want. And what I recommend that you do is, as you're editing your chart of accounts, run a profit and loss, run a balance sheet, and see how the reports look, and adjust it until it makes sense to you and it looks the way you want it to look. And finally, align your revenue categories with your expense categories. So, if you have a revenue category for turkey, you want to make sure that your turkey expenses are called out as well, because you want to know what's my cost of production for turkey. So if I can easily see my revenue and I can easily see my expenses, then I can really make a good assessment there. So in terms of daily-ish tasks, and I say daily-ish because depending on the season, depending how many transactions you have in your business, this may be once a day, it may be, twice a week. But on a regular basis, you want to record your expenses. You want to log invoices. If you've created invoices for customers, you want to make sure that you're getting your invoices into QuickBooks. You want to also record if invoices have been paid, and you want to record any sales or revenue or other deposits. Now, if you're using QuickBooks Online and you have the bank feed, then you want to make sure that you're clearing out your bank feed as well. It occurs to me as I'm looking at this now, recording expenses and sales and revenue and other deposits often appear in your bank feed. Things like your invoices to customers are not going to show up in your bank feed. QuickBooks doesn't know that you've sent an invoice out if you haven't entered it in. It only knows things that go through your bank feed. So I encourage you to make sure you log these things as well. So that is the end of the QuickBooks section. We're going to talk about next how to use this information. And I just wanted to pause for a minute before we wrap up our conversation about QuickBooks, if there are any other questions about this. And oh shoot, what did I want to say? I had a comment.
Oh, I got a question.
Yeah.
Okay.
Go ahead.
To determine profit, you subtract the expense from the revenue, and that's your profit.
Yep.
Okay.
Yep.
All
Yep.
right.
So, and obviously, the goal is to figure out how to make the most profit, and understanding how the cash is coming in and out of your business can help you make a decision to have the most profit.
Okay, great. Thank you.
You're welcome. Any other questions?
I've got a real quick one. You mentioned logging the invoice to customers. If I remember correctly, isn't there a way to send out those invoices via QuickBooks? So wouldn't it like log in as part of the system? I'm not super familiar with QuickBooks, so I'm not sure if that's how it works.
Well, I guess, logging invoices, whether you can, if you send it through QuickBooks, then you've logged it into QuickBooks.
Got it. Okay.
But if you're using sort of that old fashioned sales book, I know a few farmers that still use that, and they're doing their delivery run and they're sort of scratching it out on the sales book. Then when you get back to the farm, you still need to enter it in.
Got it. Okay, I understand. Thank you.
Yep, absolutely. Any other questions? And Corey and Orville, great job on unmuting yourselves and asking questions. I'm glad that you weren't feeling shy, and other folks, if you have questions and don't have the energy to type, feel free to unmute yourself. Okay. Well, I guess we'll keep on moving on. So, at this point, it's probably feeling like a chore and a burden. And I just wanted to start to share with you, where we're going with all of this and, how to read your numbers. So the goals of this section is to give you a basic overview of the financial statements and cover some key concepts when reading financials and clarify the difference between profit and cash flow. So as I mentioned, the financial statements are a summary of the transactions that convey information. So the income statement is a summary of the business operation. The balance sheet is a summary of what you have and how you got it. And the statement of cash flow is the summary of how cash moves in and out of your business. So this is an example of an income statement. You've got your revenue categories here. I generally say only use sales channels or products, enterprises, but this farmer has like a seedling sale once a year, so they decided to call out seedling sale separately. They have their items for resale, cost of goods sold. Here's the direct operating expenses and the different categories that they have, payroll, and the different categories that they have, and then they show a net income. So, when we're looking at income statements, we can look at a year in isolation, see how we did, but oftentimes we'll look at trends. So I'm curious, who here is concerned that the labor expense is increasing over time? Anybody worried about that?
Well, I see it happening in the future. If you start a manufacturing business, in a business where you have to pay people.
Yeah. And so if you see labor going up, Sarah, Hannah, Sequana are all concerned as well that labor is going up. Melody, on the other hand, depending on if my profit was increasing as a proportion. And Tim writes, only if revenue doesn't increase proportionally. And that's, exactly right. If payroll is going up, how is revenue going up? So I see revenue is going up as well. So are folks still worried? Revenue is going up, payroll is going up. Are you worried?
A little bit, a little bit. You may want to, make certain amount of money.
Yep. So, Tim writes, only if revenue doesn't increase proportionally. And the way we know if revenue is increasing proportionally is to common size. So, we look at payroll as a percentage of total revenue, and we can see, yeah, payroll's going up, but so is revenue. But how is it going up relative to revenue? And this notion of common sizing, or looking at numbers as a percentage, is how we can sort of compare year over year. These numbers are not neat and even, they're messy. And by looking at them as a percentage, we can see the trends and compare year to year. The other important thing about reading the income statement is that net income does not equal cash flow. You may have profits and not cash. You may have cash and not profits. So here are a few examples of how net income does not equal cash flow. So if you receive a loan, you have cash that comes into the business, but it's not revenue. So you look at your bank statement, you're like, oh my God, I'm doing so great. I've got 30,000 in the bank. But if that 30,000 came in because you had a loan, that's very different than 30,000 coming in because you had sales. Likewise, if you're paying back a loan, you have a cash outflow that is not an expense. So you might be like, oh my God, my business is so profitable. Why don't I have any money in the bank? You maybe are paying back a loan. If your customers do not pay you on time, you may have revenue. You may run a report and see the revenue, but you may not have cash in the bank. If you buy a tractor, you're going to have a cash outflow. If you categorize that tractor as a fixed asset, then you're not going to see it on your income statement. You're going to see it on the balance sheet. So you're going to have a cash outflow, but it won't necessarily appear on your income statement. And finally, if you record depreciation, that is going to be an expense on your income statement, but it's not a cash outflow. So lots of ways that net income doesn't equal cash flow. So, it's important to look at the complete picture, not just at your income statement. Which leads me to the balance sheet, which is the balance sheet is assets, liabilities, and owner's equity. And it's called the balance sheet because it's always in balance. Assets always equal liabilities plus owner's equity. And it's called the balance sheet because it's always in balance. It's the ending balances of what you have and how you got it. It's, cash, inventory, equipment, breeding stock, buildings. These are your assets. These are things that you have that you can generate future revenue. Somebody was asking about perennial plants. Perennial plants, or an orchard could be an asset because it's going to help you generate income in the future. And how did you get those assets, those things that you have? Did you borrow money? You may have borrowed money from your vendors. If you go to the farm supply store and you shop there all the time, they may extend credit to you. So you may have all this inventory, but you haven't paid for it yet. Or you put it on your credit card or took a loan. So you may have borrowed money, or you may have earned it. You may have taken your retained earnings or your net income and gone out and bought things. Or you may have investors if you're a larger scale farm, or you might invest some of your own money. Saquon is asking if the presentation will be available later, and I assume that Mary will be sharing it with folks. I believe we sent you a copy, so hopefully you can share with folks as well. So this balance sheet equation is the balance sheet. And I just wanted to, share an example of how a balance sheet might look. So, we have a period of time. We can see, ending balance. What do we have at the end of the year on 2018? We have our total assets. We can see our total liabilities. We can see our total liabilities plus equity equals each other. And we can see, what's our ratio of liabilities to assets. So, if we have all these liabilities, how much money did we have to buy to get them? We can see that we've got a mortgage that's paying for, our land and our infrastructure. So, maybe the mortgage is paying for those things. So, the balance sheet can really, share a lot of, oh my goodness, sorry about that. Animation got wonky on me. Can, sort of clarify your financial position, your assets relative to your liabilities. It can also help you manage cash flow. Current liabilities are things that are owed within 1 year. So things like accounts payable or credit card debt or taxes payable. These are things that are due in short order. You can see, oh, geez, I've got 20,000 in current liabilities. What do I have in my bank account? Oh, well, I've got, 18,000 in my bank account. That's not quite enough. But I also know that I've got $18,000 of outstanding invoices. So if you have a good record keeping system, you can really use the balance sheet as a cash management tool.
Julia, can I just ask a question about
Oh,
that?
absolutely. Yeah.
A lot of us are probably just small business farmers where some of that stuff on the balance sheet is hard to separate between what's business and what's personal.
Yeah.
Like land and buildings and stuff like that. Do you have any suggestions for that?
Well, I guess, boy, one thing to think about is you have a personal balance sheet and you have a business balance sheet. So you may want to, if you might have student loans, for example, and, so you may want to consider what's personal versus what's business. And certainly if you're going to get a loan, you may need to have both details of personal versus business balance sheets. As a financial management tool, you may want to be looking at the, current assets and current liabilities to sort of understand how the money is coming and going in short order. And it can also help you see where the cash is going in your business. So, I think each person's situation is a little bit different and how you structure it, but just sort of, I think to your point, make sure that you're clear what's business versus what's personal. Does that answer your question?
Sure, thanks.
Yeah.
And I just actually have a quick follow-up.
Yeah.
Kate must have been reading my mind because I was thinking about the same thing. And I'm curious sort of how that fits into the concept of like, for example, from my current understanding of the different like business models you can adapt, I think I would eventually transition from a sole proprietorship to an LLC. And so I'm curious kind of how that factors in. Because like, for example, I'd have a mortgage payment for the land or something like that, but then I'm also starting up an LLC and making profit off of, crops and things like that. And maybe I just don't understand enough about it yet to fully understand how those integrate, but
yeah. And I think, there's also sort of the internal mechanics that you might do that, we'll talk about this when we get to the break-even analysis, but it's like, what does the farm need to do to support my mortgage? Whether it's a personal mortgage or a business mortgage, what do I need to do what does the business need to do to cover these expenses? So, understanding what you need to do. If you're an LLC, and I'm not a tax expert or business structure expert by any stretch, but I think if you're an LLC, you really need to keep the personal and business separate, and you may want to pay rent to yourself for the use of the land to make that work.
Got it. Thank you so much.
Sure.
I'm going to chime in very briefly, and this is not tax advice.
Yep.
Simply an observation. The IRS requires whatever you do to be defensible and reasonable. And any tax expert I've ever talked to said what that means is write it down. So you may say 50% of your land is part of the farm operations, and so that's what you're doing. But you need to be able to justify it.
Yep. And I think, yeah, sorry, I just lost my train of thought. Thank you, Jeff. Any other questions, comments?
Oh, yes.
Sorry, I'm sorry, Orville, 1 second. I think,
Okay.
this goes back to my earlier point of what we do for business management is different than what we do for taxes. So, how we categorize our land on our balance sheet, whether it's personal or business, and the mortgage is personal or business, I don't know. What we might do to file our taxes is not necessarily how we think about it for our business. And, as a person who lives on this land and has this operation, you want the operation to support it. So it's all integrated, but you may not necessarily integrate it for the purposes of filing your taxes. Sorry, Orville, go ahead.
Okay. I'm a bit confused about this math over here on the. Why you came across that problem before?
It's a lot of numbers and it's complicated. So we have our assets. So
No,
we've got,
no, this part over here. I understand this, the asset. I'm talking about the equity. How we arrive at this balance over here.
Yeah, so equity is, when you opened up the business, maybe you already had a tractor and a car and a barn, and so you had the opening balance of $40,000, things that you invested.
Mhm.
You may have taken 30,000 out of the business. The 78,000 and the 49,000 are the income. The net income on the balance, the net income on the balance sheet is what you've earned in income this year, and the retained earnings is an accumulation of what you've earned from the beginning of time until today. So this business in previous year had a combined profit of 78,000, and and in this current year had a profit of 49,000. So that is the equity that is in the business. These are the liabilities, the things that they owe, and the combined total liabilities and total equity is the same as the total assets.
So basically you add all these, the 40, the 78 and the 49 together,
and
then
subtract out.
subtract the 33 with he withdrew.
Yep.
Then add this, and the total is this and
Yep.
this.
Yep.
Okay, quite understandable. Thank you.
Certainly.
All
So Kate's asking, where's the 20? And where's that 20,000 that you're talking about? Where does that? Oh, here, the current liabilities. Sorry, I had to. So we have current liabilities and we have long-term liabilities. So the total liabilities is the current plus the long-term. I think sometimes it's really helpful to export these reports from QuickBooks into Excel so that you can see the formulas and see, how it's all fitting together. Any other questions?
So why are the liabilities not a negative number?
It's a quote unquote absolute number. So it's like, this is the money that you owe. So, it certainly detracts from the value of your assets. So, assets minus liabilities is the equity that you have in your business. So, if you think about it here in terms of the income statement, all the expenses, even though they're, quote unquote negatives, are shown as an absolute number. They aren't shown as negative numbers. And when you run a report, you'll see just like booth fees, for example, 2,500, even though the expense is negative against the revenue. Does that make sense?
Getting there.
I always look at the liability as a negative.
Well, the liability is what you owe. It's not necessarily expressed as a negative number, but it's still, what you owe.
Okay.
So, you owe 312,000. That's a liability, even though it's not expressed as a negative number. It is, the absolute number of what you owe, not negative, not positive.
Okay, understood.
Yeah. Great questions, all. Thank you. So in summary, good bookkeeping does take effort, but your efforts will be rewarded. you need to find a system that's going to work for you and gives you the answers you need. And find a system that works for you that you feel that you can maintain also. I think sometimes people get a little bit ambitious in how much they want to do and then end up doing nothing. And I'd rather see you do something than nothing. QuickBooks is definitely the standard solution for a lot of farmers. But if that's too much, I want you to do something. Use an Excel spreadsheet if that's going to work, or Google Sheets. And the more you look at your numbers, the more it's going to make sense for you. If you only look at your QuickBooks or your bookkeeping Excel Google Sheet system once a month, it will always be a sea of numbers to you. But if you look at it on a regular basis, it's going to start to be internalized, and it's going to be familiar, and it's going to get a lot easier. And, I totally recognize that the learning curve is steep, which is why we're here to help you. So definitely reach out to Jeff if this is inspiring to you. Next week and the week after, we're going to start to talk about how to use this information with break-even analysis, cash flow budgeting. I think I may have gotten my topics mixed up between the weeks, but we're going to cover all of these things in the next 2 weeks. But this kind of analysis is informed by your historical financials. We can do a break-even analysis. We can do scenario planning. When we look at your historicals to see what you've done, it can help us plan out in the future based on, we know your cost of production is going to be this. So if we grow and do that, we can sort of estimate what we think things will be in the future. So this bookkeeping system is going to be the launching pad to making decisions about growth and profitability. I want to thank you all. I think because we're such a large group, it's harder to ask questions and get all of you talking together. But I don't want you to feel discouraged. I'm happy to stick around for another 30 minutes, give you your full 2 hours. But if you want to reach out to us, if you need more support, I have a lot of video tutorials on my website. The CARE Project has a lot of video tutorials as well. I encourage you to reach out to Jeff. Jeff, who introduced himself in the very beginning, who can help connect you with business advisors if you want more support. So Kate asked to get ready for our next class. What report should we be looking at? I would say, start looking at your income statement. If you have an income statement in your QuickBooks and you want to run a report by year, I would say start looking at that. And then, I think as we start to do the analysis in the coming weeks, you'll start to get a sense of where you need to make adjustments in your bookkeeping system to get the information you need to do these kinds of analyses. Any other questions?
Julie, I have a question for you.
Yeah.
I don't own a farm right now,
Okay.
but am hoping to in the future.
Excellent. We need more farmers.
Yeah. So I'm wondering if QuickBooks is a good personal finance tool as well. I'm thinking like if I started using the program as a personal finance tool just to get
familiarized,
more fluent with it.
Yeah.
Would that be a good way of kind of starting out and becoming more familiar with the software?
Absolutely. And I actually use QuickBooks for my personal financials. It's like I pay my phone bill and I enter it into QuickBooks, and I balance my checkbook every month in QuickBooks. And if I have a question about a client's business, I can go into mine. And if I mess up my personal financial QuickBooks, who cares? I'm not as rigorous with my personal finances as I am with the business finances. So I think it really is a great tool. It's certainly going to be more robust than you need for personal finances, but I like the idea of using it as a practice.
Okay, thanks.
Yeah, absolutely. Any other questions from folks? Like I said, I'm happy to stick around for a few more minutes and answer questions, but if folks don't have questions, I certainly don't want to hold you captive. And we're excited to see you next week. Mary.
I'd like to take a minute and just say thank you,
Oh,
Julia, Jeff, and Kian from Joe Benelli and I at UConn for this great session. And we look forward to the next 2 coming up.
awesome. Thank you. And thank you for having us. It's been a lot of fun chatting with all of you.